Everyone wants to know why the economy is not yet collapsed, especially because I've been showing you in every video how it actually is collapsing. The reason is simple, because there are so many pieces to the economic puzzle. But you got to keep in mind that every single time you take one of those pieces out, the foundation of the economy weakens. So how does an economy collapse? Gradually and then suddenly. Let me show you what some of those pieces are and will be coming up. I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer specializing in custom strategies to help you survive and, dare I say it, thrive through the reset that we're frankly already walking through. And this is the economy. Let me show you how it works, because it's made up of all sorts of pieces of this puzzle, like, I don't know, let's say real estate and the peak price on that. And how about, oh, this one will go easy, okay. How about commercial real estate too? I think that might still be going up. Ooh, those student loans, that makes things a little dicey. How about that consumer debt? No problem, even though it's at the highest levels ever. What about the trade wars? Yeah, that just makes everything a whole lot more expensive as we're changing policies that have been in place for quite a long time. But then again, there's all those tariffs also making things a lot more expensive. And, oh, here's a good one. Let's say, the inverted yield curve. That tells you something crazy is going on, because when you loan money short term, you get paid more than if you loan it for 30 years. Makes a lot of sense to me. How about you? Of course, that's probably why the yield curve has inverted, and now that inversion is growing wider and wider and wider. A really ominous technical signal. But then we also have retirement crisis with all the baby boomers retiring. And most people can't even put $500 together in case of an emergency. Don't worry though, because we got those underfunded pension plans. Well, how are those going to be funded? Oh, I don't know. Maybe let's say with an overvalued stock market. That'll certainly help the retirement crisis, I'm thinking. And what about interconnected banking systems? So no matter where this crisis starts, it will travel through the entire global system. But no worries, because hey, you got bail-ins, so they can use your deposits to help support a failing bank. But when that's not enough, there'll be bailouts too. So taxpayers, yep, we're going to be on the hook. No problem. Here's a big one. Loss of reserve currency status for the US dollars. So all those excess dollars that right now countries have to hold, yeah, they'll be coming home. No worries. How about ETF herding, where the stock market moves in one direction or another? And we really cannot forget the level of U.S. debt. And let us also keep in mind that we have a credit crisis on the horizon. Of course, if the central banks just keep printing this money for free, yeah, maybe we can avert a crisis for a minute or two. But those interest rates, they better stay low, even go negative. That way we get to pay people to borrow money from us. Makes a whole lot of sense to me. especially when we're sitting with many years of stagnant wages for the average income earner. But don't worry about that, because corporate profits are doing pretty good, unless, of course, they have to pay higher wages, in which case that corporate debt could be a little harder to take care of. Biggest one is derivatives, because that's taking all of that garbage and much, much more and leveraging it. So there you have it. This is how it works. This is why it happens slowly and then all of a sudden, suddenly. I cannot tell you which one of these pieces are going to topple this whole economic puzzle. But I can tell you that this is why central banks on a global basis have been accumulating more gold than ever since the World Gold Council started tracking all of that. Because every single time one of these pieces come out, the global economy, the U.S. economy, gets closer and closer to collapse. That's what every one of my videos is showing you. That's the weakening economic process. So where do you want to be when all of this collapses? If central banks are accumulating gold, maybe that's the answer. Because they know, just like you and I know, that financial shields, they're made of physical gold and silver, not paper or promises or certainly Wall Street products. You have a choice. What do you want to be holding when this house of cards falls?